All right, so I wanted to build out a greater class, if you will, or training in regards to VA home loans. So it's kind of the master class and really want to unpack how veterans and military families can compete in this market. It's really kind of the thought here, right? How can you do this? So what I want to share is the VA loan really the best mortgage in America? I personally think it is. For eligible buyers and borrowers, it may be one of the most powerful home financing tools available. 0% down, no mortgage insurance, super competitive interest rates. Right now, as I record this, is the 14th of July. And rates are like 6.5, 7, VA 5.8, 5.9, right? Flexible credit guidelines, limits on certain closing costs, ability to reuse that benefit. There are VA loan assumptions and financing above conforming limits. So having the benefit using it strategically are two different things. Again, that. So today's agenda, we're going to understand the benefit, qualifying, buying the property, winning the transaction, PCS and assumptions, wealth building, right? So let's talk about this. VA loans are often misunderstood. Some sellers believe VA loans are difficult. Not true. Some agents believe that VA appraisers always require, or appraisals, pardon, always require repairs. Definitely not true. Some veterans believe that the benefit can only be used once. It's not true either, guys. Some buyers believe they need perfect credit. Not true. Some homeowners believe they must sell before buying again. So most of these assumptions are wrong. The VA loan isn't weak. A poorly structured VA transaction is weak. So what is a VA home loan? The VA doesn't lend you the money, right? So the loan's made by a private lender, American Pacific Mortgage Company I work with, we're one of them. The U.S. Department of Veterans Affairs guarantees a portion of it, which helps eligible borrowers access favorable terms. The VA provides loan guarantee, program guidelines, appraisal requirements, servicing protections. The lender provides the mortgage, underwriting, interest rate, pricing, processing, closing. So choosing the right lender still matters 100%. So who may be eligible? Veterans, active duty service members, National Guard members, reserve members, certain surviving spouses. So the certificate of eligibility is really where the process begins. Okay. So the anatomy of a certificate of eligibility. Here's a sample of it. What we're looking at: veteran name. We have the entitlement, entitlement charged, what's available. There's a funding fee, or if they're exempt. If you're exempt, it means you don't have a funding fee, right? So loan type purchase, right? That's what we'll show on that. So don't guess about the VA eligibility. Pull the COE. We could get it if you need us to as well. It helps if you have the DD 214 and wants in that test. But what's the VA entitlement? Full entitlement, no VA loan limit essentially would apply. And the VA will guarantee subject to lender approval. So income and underwriting, appraisal, all that, right? Remaining entitlement is what's remained after the acquisition if you use some of that entitlement. So you could potentially have more than one VA loan at the same time. Here we go. Myth busting. I have already used my VA loan. Using your VA benefit once does not necessarily prevent you from using it again. You can sell the property and restore entitlement, pay off the VA loan, or request restoration. Use remaining entitlement. You can have more than one VA loan simultaneously. Obtain a one-time restoration in certain situations and purchase again after foreclosure or short sale when eligible. So the VA is reusable. The VA home loan is a reusable benefit. So is there a maximum loan amount? Full entitlement. Does not impose a county loan limit on loans over 144,000. The borrower could potentially finance 100% of the finance purchase price. Of course, in underwriting, we still look at loan amount, debt ratio, income, what have you. But no, I mean, we've funded a VA home loan at 3.5 million. So, right, there are VA loans that go much higher than what's the conventional FHA loan limits that we generally see for conforming loans. So counting conforming loan limits can have an effect on the required down payment in some cases, but keep in mind that the VA loan limit does not mean unlimited borrowing power. We still have to qualify the buyer. So 0% doesn't mean $0 needed. Cash or close still matters. So you have earnest money. When you get an escrow, you generally put a deposit on the transaction. There's inspection, appraisal, unless it is covered. Closing costs, right? So those are on top of it. Usually about 2% of the sales prices in most states, right? That's escrow, title if there's an attorney. usually paid for. Some of these things are paid for by the seller, by the way, but prepaid property taxes, homeowners insurance, um, right? The VA loan doesn't pay for moving expenses or emergency reserves. So a veteran may finance 100% and still need cash. Good planning begins before writing the offer is kind of the footnote there. So VA funding fee, what is it? So the VA funding fee helps reduce the cost of the program to taxpayers. Amount may depend on first versus subsequent use, down payment amount, type of loan, type of military service for legacy cases, exemption eligibility. So the funding fee can generally be financed into loan, and there's no monthly mortgage insurance on VA loan, which is a huge benefit, right? So down payment can change the fee. So 5% down, 10% down, right? In subsequent use, as you can see, these graphs show, it's a little bit lower, right? Depending on what the down payment looks like, if it's a subsequent use, right? So notice a drop of 5 and 10% down. The VA funding fee exemptions applied to eligible buyers. So who may be exempt? Receiving VA compensation for service-connected disability, eligible for compensation but receiving retirement active duty pay instead, rated eligible based on a pre-discharge review, certain Purple Heart recipients, still serving active duty, certain eligible surviving spouses. So this is where we want to confirm this up front, right? When we get started. See if you have a VA funding fee. So VA versus conventional. Let's look at this. 700K purchase price. VA 0% down, 20% down conventional. And you could get away with less down conventional, candidly, right? But it gives you a base loan amount, loan balance, right? But which is better depends on the veteran's cash, payment comfort, goals, opportunity cost. I've had VA buyers put 20% down and still do a VA home loan. Why? Interest rates are better than conventional. Should a veteran put money down? 0% is an option, not a requirement. So putting the money down, put something down, may lower the monthly payment, reduce the funding fee, improve affordability, reduce the loan balance, and strengthen your financial position. So keeping cash may provide emergency reserves, investment capital, moving expenses, repair funds, flexibility after PCS. So the right down payment is a strategy decision. 4 parts of underwriting for a VA home loan. Credit, history of managing obligations. Income, stable and reliable income. Assets, funds to close and required reserves. Property must meet VA requirements and support values. So VA underwriting includes another important calculation. Residual income. It's a big one. It's what residual income is. One of VA's most important underwriting tools, the money left over after everything's paid. So this kind of breaks that out, right? Say you have 9,000 a month in gross income, tax, insurance, housing expense, other debts. In this case, right, as you go through that, as you can see in the fifth column there on the right, 4,100. So two borrowers with same DTI may have very different residual income calculations. The VA evaluates a household's actual cash flow. Is there a maximum debt income ratio? 41% is a benchmark, but it's not an absolute maximum. Higher ratios may be approved depending on AUS findings, which is our underwriting system through either Fannie Mae or Freddie Mac, right? Those are the automated underwriting systems that we use. This is what AUS stands for. Residual income, credit history, cash reserves, payment shocking, some compensating factors. So VA underwriting is about the complete file, not one ratio. Credit score requirements. VA does not set a universal minimum credit score. Lenders do. So keep in mind, one lender may decline a borrower. Another lender may approve the same borrower. Credit overlays and pricing can vary. Manual underwriting may be available. Recent late payments may require explanation. So a lender decline does not always mean the veteran cannot qualify. We love to help, but no. So if you haven't gotten approved and that may be you or somebody we'd love to help. So that's where we can help. Understanding military pay. So this will show up, right? So base pay, you have your housing allowance, your subsistence allowance, flight pay, hazard pay, overseas pay. So income may be evaluated for stability, likelihood of continuance, tax treatment, and documentation. Military income should be reviewed by someone who understands this documentation, what it all means. So about disability income. Disability income can affect the loan in multiple ways. Qualifying income, non-taxable income treatment, potential gross up for qualification, VA funding fee exemption, additional residual income considerations. So small underwriting details can materially change buying power. So PCS moves create unique decisions. Decisions to make. You sell the home, keep as a rental, use VA again, use remaining entitlement, buy before selling, and a new location. So those considerations would affect, of course, entitlement, rental income, reserves, occupancy, property management, cash flow, future PCS risk. So PCS move should be treated as a housing tragedy, not just another transaction. So can you have two VA loans? Kind of piggybacks on that last thought, right? Yes, potentially. It's a math problem, not a rule against it. So total entitlement available, charge on one home, available for home two. Let's say you purchase property, VA home loan, you get PCS orders, you retain home one, and then you want to buy home two. The key calculation we're looking at here is how much entitlement is already charged, how much entitlement remains, and what is the county limit for the new property? Here's that entitlement calculator. 4 steps, real numbers. 832, county limit. Max guarantee 208. Entitlement use 100K. Remaining 108. So what does that mean? 432, 750. Veteran chooses to purchase above that. A down payment may be required. This is why we want to get that certificate of eligibility before making assumptions. So a VA isn't just for entry-level homes. Same 0% down principal, bigger number attached to it, standard VA 700,000, pardon. A VA jumbo 1.5. We could go higher though. As I mentioned, we did one for 3.5. So still choose any size, no mortgage insurance, competitive interest rates, flexible financing. May require more. Stronger reserves, credit profile. May have some lender overlays, candidly, and an additional appraisal review. So VA can be a powerful jumbo financing strategy. Safe, sound, sanitary. VA minimum property requirements may address safe access, adequate heating, roof condition, water supply, sewage disposal, electrical systems, structural safety, lead paint based paint concerns, wood destroying insects, aka termites, health and safety hazards. The VA appraisal is not a home inspection. So you still want to get that home inspection, right? So what does the VA appraiser actually do? Evaluates market value, comparable sales, property condition, minimum property requirements, potential repairs, and marketability. It does not approve the borrower, approve the loan, guarantee the home's condition, or replace the home inspector. VA appraisal protects integrity of the VA loan guarantee. VA appraisers always come in low. Nope, not true. We just closed 4 in the last month, each of which actually did quite well on value. So an appraiser is an opinion of market value supported by market data. Potential challenges can occur when the contract price exceeds comparable sales. The property is unique, concessions affect the transaction, like seller credits, things of that sort. The market is rapidly appreciating, and the appraiser lacks strong comparables. The solution is preparation, avoiding VA buyers. Tidewater, one of the most understood VA processes. Appraisal in progress. Value may come in low or below contract price. So appraisal finalized, lender POC notified 2 business days to respond, appraisal finalized. So we can ask for a revision value, send in stronger comps if need be, right? So agents could submit during those 2 days comparable sales, property upgrades, pending sales, relevant facts, and market information to the appraiser for reconsideration. That's what this is. ROC. Let's say you submit the ROV with evidence, lender reviews, value may be revised. So an ROV is not, I don't like the value. Evidence matters. We need evidence there, right? VA escape clause. What happens if the appraisal is low? So this is one thing. The VA mandatory escape clause generally protects a veteran from being forced to complete the purchase when the reasonable value is below the contract price. So it reduces price, buyer pays the difference, buyer and seller negotiate, press an RV, they could cancel contract price. VA buyers can potentially waive other contingencies, but the VA escape clause has specific requirements. So not every condo, let's talk about condos a little bit, is automatically VA eligible. We want to look at it. We don't want to assume that an FHA approval means a VA approval. So VA offers can be structured creatively. Certain seller concessions are generally limited to 4% of the value of the home, right? This shows kind of what that looks like. So 4%, 700K is 28,000. This gives a breakdown of what that may look like. Now, the 4% rule does not mean the seller can pay only 4% of the closing costs. This is one of the misunderstood VA guidelines. Why some sellers fear VA offers? It's usually because of bad information. Price will be low, buyer has no money, VA requires too many repairs, financing is risky, VA takes too long, the seller has to pay all costs. Most of these concerns can be answered with strong underwriting, proof of funds, experienced agents, and a lender who calls the listing agent. That's huge. VA loan isn't weak, structure matters. So get fully underwritten before shopping, review the veteran's COE and entitlement, verify assets and reserves, understand the property before writing, check condo approval early. If you're looking at condos, structure realistic contingency periods. Have the lender call listing agent, explain the VA appraisal process, order the appraisal immediately, communicate throughout, close on time or early. Should VA buyer waive contingencies? Understand the risk before you do it. Sure, in financing contingency, it helps. We wrote a few of them without financing contingencies because they're fully approved and they're strong. But sure, in appraisal contingency, waiving certain contractual contingencies, appraisal gap strategy, it's a big one. Non-contingent offers. Non-contingent offers will win in a lot of markets in California. But the veteran's financial position to market the property and contract will matter. The VA escape clause requirements still apply. Winning the house is not the only goal. Protecting the veteran matters too. So VA assumptions. The buyer takes over the seller's rate, balance, and remaining term. Here's an example. 500K, 2.75. Those rates were real nice, right? The equity gap, 250. So the buyer would cover the gap through cash, a second mortgage, seller carry bet, negotiated price. The risk is the non-veteran assumes the seller's entitlement. The veteran assumes substitute use entitlement. Now the seller may be able to restore their entitlement, but understand the entitlement here. You may lose a portion of that entitlement. So before completing an assumption, understand who's assuming the loan, what entitlement will be substituted, how much remains in the seller's future plans. Great interest rate can create a major entitlement problem if the transaction isn't structured correctly. It's huge to know. So here are some things. VA could be a homeownership benefit, long-term wealth building tool. Buy 0% down and build equity, receive PCS orders, keep that one as rental, use a restored entitlement, and repeat strategically. I've had quite a few clients do this over the years. So here's one that we just knocked out. Kid you not. Petaluma, California. It's not San Leandro. That's incorrect. But we ratified the contract on June 23rd. Appraisal was ordered the same day. Appraisal came back 2 days later. Clear to close the day after that. Loan documents went out that Monday. VA loans don't have to take 30 to 45 days. With a strong team, strong underwriting, fast appraisal ordering, super communication execution, this could be possible. It's helped a good friend of mine who's stationed at Two Rock in Petaluma Coast Guard. Amazing clients, and we won. Here's another case study. VA Jumbo in Alameda, California. It's around the same time. This other one, by the way. Ratified on the 15th, loan approval on the 17th, appraisal received on the 19th, clear close on the 22nd, clear close in 7 days. Higher loan amounts don't automatically mean slow transactions. Team and process matter. Communication, again, here, huge. Totally won. It was awesome. 10 biggest VA home loan mistakes. Assuming the benefit can only be used once, not reviewing the COE early, not calculating remaining entitlement, automatically putting money down without comparing strategies, believing every lender has the same VA guidelines, shopping before getting fully approved, failing to prepare the listing agent, assuming the VA appraisal is a home inspection, ignoring VA assumption entitlement issues, and choosing a lender based only on an advertised interest rate. The benefit is powerful. Strategy depends on how well you use it. Here's a playbook. 12 things every military buyer should do. Pull your COE. If not, contact us. We'd be happy to help. Review your entitlement. Confirm funding fee exemption status. Get fully underwritten before shopping. Build a comfortable monthly budget. Compare 0% down with other strategies. Keep adequate reserves. Understand your PCS timeline. Evaluate keeping your current home. Review property and condo assess early. Build an offer strategy with your team and work with a team that understands VA home loans. It's huge. Go to your VA home loan plan. 5 questions. What I want to see. Where are you stationed or looking to buy? What is your monthly payment comfort zone? How much cash do you want to keep after closing? Have you used your VA benefit before? Do you currently own another property? So what we do here is we evaluate all of this. Eligibility, entitlement, buying power, down payment options, PCS strategy, keeping versus selling your current home, competitive offer strategy, right? All these things we like to unpack. So if you want to schedule a call, QR code right there. Love to talk with you and just unpack some of this, answer some questions. I'm sure there's a lot. I know this presentation may have been like drinking water from a fire hose. We're here to help. Visit the information in the caption as well. There's some other cool links in there for you, and really appreciate your time.